Hello, everybody. Welcome back. Today I'm going to be talking about a trade I'll put on Monday, assuming nothing drastically changes before market open. But let me remind you first, I'm not a financial advisor. Any trades you put on are your decisions. You're the one that deals with the consequences, not me. Make sure it fits your risk profile if you're going to try to follow this kind of trade. And for those of you that know me, I sell premium. So I look for opportunities where things are oversold, where I could sell a put below it and just collect a nice little income while we just wait as time eats away at the contract. So for this trade, I was actually looking at Intel. And Intel recently had their earnings, and there was a big sell-off on Friday morning. And it looks like it found a bottom around 52.32. And even after close, you can see it went back up a little bit. So it's showing signs of recovery already. Let's go ahead and look at the 5-day, 5-minute. And here you can see it was on an incline until we got earnings. Ooh, I wonder what that spike's all about there. That was kind of interesting. But it sold off after the earnings report, and then on Friday open, went down, found a bottom here, which is why I think this could be a good candidate for selling a put. Let's look at the 1 year, 1 day. And I don't like how the graph has all these gap ups and gap downs, but those happen around earnings, which we've already had the earnings play happen. I'm going to turn off all those patterns. We don't need that for this. And if we think 52 is going to be like the new bottom, getting below that is where we want to be. Look at the volume profile. We can see 57 could be a point of resistance. If it gets above that, it becomes a support. 50 or 49.32 is about where we want to be under, or at least close enough to roll down to get to if the trade does not work in our way the way we want it to. Going back to the 2 year, 1 day, you see the all-time low is 43. So I want to be in a position where I can roll down to get under that if this trade goes against me. So I'm thinking we want to be at the 50 mark, because then we can roll, get underneath that support. And if it continues to tank down to 43 and get back to all-time lows, we can continue rolling, and it shouldn't take too long to get under 43 if needed. So this could be a trade that takes a while before we get out of it with a profit if things continue to go against us. But I have a neutral to bullish bias on this stock right now, which is why I'm going to be selling a put. Now, one of the key things to know about when you put on a trade is to come up with your plans of what happens when it goes wrong. I don't care if you see all the profit in the world, you got to have a plan B, plan C, how you going to manage this position. And the only reason why I'll be playing this one is because A, I don't mind owning 100 shares of Intel at around these price levels, because I think long term it's going to go up. B, I have a plan, and that plan is going to be that I roll this trade if it goes against me. So I'm not going to put a stop loss and lock in the loss early. If I need to, I'll wait the 37 days or whatever I'm going to end up choosing here to see the profit, and if I don't see it, then I roll it a couple times, knowing that the worst case scenario is I'm going to be buying 100 shares at whatever strike price I decided to pick them up on and start the wheel on. Something else to know is my profile here. So my portfolio that I'm going to be trading this on is 200K. So something like a 50 strike put on this is only about 2.5% of my portfolio. So it's not like I'm YOLOing in this position. I'm going to be doing like a small play on this. I'll pick up a couple bucks on it. Let's go ahead and look at the trade chart here. If you're liking this content, go ahead and click like, subscribe, and turn on notifications so you can stay up to date on any videos I put out. As you know, I tend to do 30 days or longer contracts, so I just let it sit there and bake, let theta do its thing. So like I said before, I'd be looking at like the 50 or 49 range is where I want to be. 51 even is under 70% probability out of the money. So I'd like to say, like, if my strike price I want to do is less than 70%, then I must have looked at something wrong, because there must be more risk in there. So 74% here, 50 strike. We're looking at the bid and ask. We should be able to get a fill around 60, which would be really nice. That'd be a little bit over a 1% return on cash risk if it was a cash secured put. Let's go ahead and just check this strike 1 week further out. 50. We gain a couple cents in the fill here, about $5 or so. Can get even safer, it looks like, and still get over 1% return. So I'll be looking at the September 3rd and see if I can get a fill in these guys here, because I like that it's 78% versus the 74%. It's a strike further, 49. We saw that there was support at 49.30, so it's even below that level of support that I would want to roll down under. So I'm just going to start with the September 3rd play here. And I'll be doing this in my taxable account, which means it's going to be done on margin. So to get to that, I click on my watch list to bring up the options chain. Then I find the date that I'm going to be looking at, September 3rd. I'm looking at the 49, and I would click sell. And then what's neat about Interactive Brokers is it'll show you the margin impact here in the option strategy builder. So this is only going to take $716 of margin to put on this trade. And if you want to look at it return on risk, you're looking at, what's it? Let's say 53 fill divided by 716. And we're looking at 7.4% return on risk. But I like to think of it as a cash secured put, like the cash needed to secure the position. So I'm going to show you how that calculation is done real quick. So we said we might get $53 when we sell this, divide by 4,900 because you add 2 zeros to the end of whatever strike you're doing. And we're looking at about a 1% return for 40 days, which, you know, that's actually pretty good. Because if you think about it, if you put this cash into a high yield savings account, I think interest rates are what, like below 0.5% for an entire year. Here you're getting 1%, so double that in 40 days. That's the way I like to think of it. I know it's not as flashy as buying premium, but picking up little gains along the way is how I go. I think I pretty much just covered everything I wanted to do about this trade, but really, like, before you go doing this trade, look at your risk profile. Like, can you take assignment of, 100 shares at 49 strike if that's what you're going to follow? Do you know how to manage the position? Because this play could go down against us for a while. You saw how choppy the graph looks when you look at the chart here. Like, there's gaps up and gaps down all the time. Mostly they're near earnings, so I'm not too worried about one coming, but I'm not saying it can't happen. And if we break through this 49 level, like, we might not see support again until 45, so you might need to roll this position and manage it. So just be sure you know what you're going to do if this position goes against us. So there you go. Go ahead and let me know, like, if you guys like this kind of video, this kind of content, and maybe I'll make more of these. But I can't stress again, like, any decisions you make, like, it's affecting you, not me. So make sure it fits your risk profile. Make sure you're okay with, like, the assumptions that I'm showing you here. One of my main assumptions for putting this play on is that I'm fine with holding 100 shares of Intel at these price levels because it's proven time and time again that it goes up. So I guess that covers this up, and I hope you guys have a great week trading.